Welcome to TradeTheMBI.com. This is John. This report is for July the 2nd. As we get ready for the 4th of July holiday coming up here, we can look at some really key factors. One, we had our dip below the red line from a daily standpoint. We've been in this short run for, going all the way back over to the peak here when we had the spike up of cyan above, just about everything, and then the cyan was crossed below by the steel, which is usually an indication that your weakness is about to begin, and then green fell below. So you had mid-term buyers fading, short-term buyers, shorts were adding in, all right here at the peak in the middle of June, and we just kept waiting for the breakdowns, and so we were just following the ABMs going through, and then finally, once the breakdown started, it made it easy because you had the 61% below the 76. And Friday was a really interesting day because we got all the way back up to the 76%, and it wasn't enough, and we got just the right signals at that particular point, and sure enough, faded all the way back, and we're going to describe exactly how we knew that we would go right back to there, not to mention the fact that we still had to go back to the dip below the red line right here. And even though the low was, down to 93, which is below the 50%, I'd be even satisfied with where that open range is, which was all the way down to 2705, which corresponds to the 2704, which we already had from our indicators of the white candle, which was indicating a retrace down there from, days back. All that being said, not much has changed. I mean, if you just look at that DOC, yes, you got a dip of the orange below green, not below red. You got a little bit of rising red, but you also have falling shakeout. So some short-term buyers have joined in, but at this particular point, we're now in what we would look at as a trend run to the short side because no steel reset. So anything that tries to pop isn't going to do very much, and that is the reality of it. While the NQ is stronger, it's still the same situation. Nothing about this. It didn't have the force dip underneath the red line, but we also know that it trades outside of the range that the S&P has, and therefore it has much more room to correct. And that kind of evening out will be an interesting one to look for because that's what we would expect from the mean reversion. And of course, the euro keeps spiking up. Every time it gets to that 23%, just can't seem to get enough juice to get over it. We've had a constantly improving shakeout as well as DOC, and we keep getting the flip down buy signals, but when that orange comes up, usually what I look for is the orange to cross the green and then pivot. If it doesn't pivot, and usually if it goes above the steel, you usually end up with complete failures. Not to mention, the second thing I look for is the no spark zone, and we'll talk about that one a little bit later because it's always an indication of rallies that aren't going to take place. Of course, treasuries, with the initial bull move, things were going, but it's just way out of whack with what's going on inflation-wise, and that doesn't make any. I mean, when you look at this, if you can't tell that later half of the year you're going to have, and even with the Saudis increasing output or whatever, some of this isn't related to supply from that side of the equation, and some of it's about just not being able to handle that capacity simply because regulations have prevented the infrastructure build to actually process everything. So, whether there's Iran sanctions, it's not really going to affect it because shale can ramp up at any time. But this is about inflation for the future and pricing this for a further devaluation of the euro, which definitely would be watching for. That would certainly impact the S&P from a earnings standpoint too. So there's some headwinds going into this summer. I think it's going to be some volatile trade. Of course, the gloom and doom crowd has been talking about the collapse for the last, half decade now. But that doesn't mean that they're not going to be right at some point. And, we've clearly got the first sub signal, clean one from a daily standpoint. Gold way late to this game, but we've talked about this is going to become attractive because at this particular point, this oversell on gold is starting to look attractive from minus 29. We finally have orange dipping. It's got a lot of work to find a range that's going to support itself, but that's okay. Just follow it as it is. So we're looking at, Friday's action along with where we're at today. Started back over here, but let's just go ahead and take a look at where things are currently in the pre-market and why I was happy to be short over the end of month weekend. Slide that back over here so we can all get a nice little view of these white candles and our expected situation. So this popped in at a very critical time at the very end of the day after we had finally achieved the full target of a positive extreme retrace, and I'll go over that one in a minute because it was an exciting trade and I wanted to spend a little more time with this paint bar setup so that you could really get a feel for how I utilize it. So through the magic of TV, I've enlarged this bit to show this end of day. Now, there's a couple of approaches that I take with the white candles. Usually if they're below the 23%, I usually start attacking them right away from a short standpoint. In this particular case, especially after coming all the way to the end and then reaching the post-market with the white candle on a Friday, I felt that we would have additional fade on that, and I was willing to stay short with that over the weekend without really much concern, because it didn't matter to me how much of a pump there was. We were going to have some kind of retrace back to that close. Now, we've seen in the previous past that you can get these, and you can get it within a buy signal like this one clearly coming from the low end, but we also know that when you're dipped this far, usually any pop that comes up needs some type of steel reset to get it going. And by the time we came to the end of Friday's post-market, the extra 15 minutes after the close, there was still nothing that gave an indication that that was going to take place. And sure, in my mind, okay, I didn't have to worry about it. Now, it was interesting because it opened up, traded lower, bounced up to the 50%, not an uncommon thing, and then you could just see the little yellow dots start to appear. In this particular case, we had right here at the end line the magenta, which is indicating dip below the red line, meaning that low's got to get retraced. So didn't happen to be awake during these hours. It may have been for some of you on the West Coast. Easily in the afternoon, Sunday would have been able to trade this. This is a beautiful setup coming through, where you also have pretty weak from the buy standpoint. You've got to have that steel, the orange here, dip down after the initial run up. That doesn't happen until, all the way over here, and by that time you've already started a new run of negative shakeout. And it gets tough for some. That's why I like looking at the dot setup coming through there, because it lets you know, hey, you're at a point where you're going to have to start getting excited about, activating yourself. They pop up at the points where those extremes get into an area where, okay, you're either going to have significant sharp algo activity to the positive extremes, or you're at your turn point. And in this particular case, they proved to be beautiful turn points. Even better, we ended up with gold trend below the 23%. Well, that also another one of those opportunities. Every bounce you take, you look to short into that pop. And then we started with another white candle. So we start changing all of these white line values, and we just start moving them. We got a new one there, the 2404 that's been revisited a couple of times. It's going to go up to the close, open. This is a debate. They don't quite act like the positive extremes. I usually go with the open. You can, or the close, depending on which one's the higher value. In this particular case, the close up here, because it was an up candle, I would go with the bottom one. That way, any move that goes above, at least I've got a retrace point that really gives me strong probability, because these retrace themselves solid 80+% of the time. Yes, sometimes it can take a day or so, and you can get a significant move to the upside on them. But in this particular case, from the, you can see it right there from the 25 close that this was. Let's look at the exact number. It was 26 and a quarter where I was shorting that one, and we went up to 28. So not exactly, really huge upside against. And you can look at the significant trail down, because now here we are at minus 18. We've been as low as minus 20 something, and even as much as we keep getting this oversold, all it's doing is producing pops that are just taking us to the 23%. We're not getting anything above that yet. So until we do, it's just not there. But let's go back to the beginning of Friday and take a look at some of the other readings that really set up this entire move, which was kind of exciting to follow. And once again, the magic moves us back over to the beginning of Friday's action, which was quite interesting because it really all began with these little red dots right here. And this was the first positive extreme that came through on the setup. And it was critical because something I've talked about before with the positive extremes, when you get the beginnings of an initial run, that first bar usually is the overexuberance one that just really is the massive short cover that sets up the pace. The second one, in my view, has always been pretty high probability is going to get retraced within the first correction phase that takes place. And that's kind of the first marker I set in this particular case, which was 27.26. Now, from a broader standpoint, any real significant weakness, particularly towards later in the day, if you've got a trend day, this becomes my target to the low side, 21. So I reserved that. I just changed it to match those white lines. But definitely have this one marked down as the overall big retrace. This one much more likely to be filled back in. And in fact, it happened like within a matter of, a couple of bars. The next one came in, and this one became good because it was also the spike move, and you can see that I had it marked here with this red line. And it was in the 28 range. And what's particularly healthy is it's like I've got that range between 28 and 32. And didn't quite fill, but a lot of times we look for just that 80%. And it was significant enough there. It produced another one. And so every time I was getting these positive extremes, I'm looking for shorting not at the close per se of those, but at the 100%. And in this particular case, we kept making new highs. So it became attractive even up here at 33. That was a previous white candle resistance level. And then it happened again up at the peak point. And what I find to be very effective is when you get this azure read and you start to get the conglomerates of your dots at the peak, it's usually the signal of the end of most trend runs. Now, it's not enough to just say that the candle itself presents it, because you're going to also have to have the secondary readings that project it, and that's where obviously you're going to be looking at the DOC, but it's one of those where it's like, okay, at this particular point, I had already started averaging in short-wise into these positive extremes with an expectation that I'm, number one, going to fill back to the 28.25 level. Also have the potential of revisiting this first positive extreme that, had been touched, which all the way down here, and or just the 50%, which would be a normal fillback from a nice run. So you've got a couple of areas that you can start to look at and engage and say, okay, at that particular point, do I still have what I'm looking for? And in this particular case, by the time, if you wait until you get the full DOC, you filled in quite a bit of the ranges right there. Like here's where it comes in, which is right at the 28, which is the positive extreme from over here. I find that a little late because it's attractive looking at the highs. Now someone can say, well, but this can keep going higher. Sure. And you have to set a reasonable stop level. Now for me, I tend to be a little bit higher than a lot of people are comfortable with, but in my book, 8 points has always been a key, and I always expect to have the ability to add 2 entries to 3. Has always been a standard that I've said that is necessary, because you can get these over pushes, and that's all they are, especially once we know we have positive extreme. We know that when that's the algo activity taking place, and they're going to boost it, and as it rises, they're going to be exiting into that bump, and then we're going to get that final read, and then usually you get the quick downdraft, which we did, and sure enough, recycled. But here's the issue, and this is something I really want you to pay attention to in the future going forward. The no spark zone. This is that range. So we have the -13, -7. That's usually where we get our best oversold buy signals, come below the -13. But when you get caught in a range between the -7 and the -13, Those rallies tend not to hold. Now, obviously, a little bit higher, the 0 to 7.5, which we're looking at here, tend to have much better success, and then particularly if the red gets over the 0 line, as it does right over here. And if we slide across into that, we end up with a similar situation. Okay, you have this positive extreme within red underneath there. It's like, well, yeah, you're in the middle of an up run, but it's still retraced completely. The problem with this kind of setup was, number one, you're not near the highs. Number two, there's not a whole lot of range between where the close is. It did show the red dot early on. If you were able to get towards the high peak at the 33, then you're really doing well. And move back just to the same 28. Those would become decent risk rewards with the close, stop just over the highs. Once we got started the new shakeout run back to the higher, we started to get several others. And again, these are happening at the 100%, which makes them very attractive. This one filled almost immediately. And then we ended up with the second setup here, which is all the way up at 38.50. Reasonable range. And then you had another one that comes over in this particular range. Well, this one had already filled, but it started up again. And from my view, it's like, I don't want to be shorting down at my ABM. I really would rather be up towards the highs, and sometimes you have to wait a little bit for that. In this particular case, we ended up started with the rising shakeout, not exactly an optimal, but as soon as I got my steel dip below, right when I get to the highs, 42, and then right after that, we ended up with another boost that took it all the way up to 44 and a quarter, but the 43.75, more than happy to short at that level as well. And then you're just in the waiting game at that particular point, because this was still appearing very bullish, but we started to have the dips of the shakeout. And once I knew that we were starting to get a conglomerate of these, it's just a question of how many more bars is it going to be before we start to get the retrace, and how far will that retrace be? Am I expecting at this particular point going all the way back down to that very first one at the 21 level? No. I'm really looking more at 50% breakdowns, and what I really want to see is a shakeout breakout where it really gets into this soft period, because that's where you're likely to get your biggest dips. I'm not worried about the soft breakdown here. What I'm interested in is when I'm getting near higher highs and I have a significantly lower shakeout like that. This became very clear to me as opportunities to short, and maybe even look for a much broader short going through. And then once the lows started to rise on a flat high, we know that tends to attract to the 0. So at that particular point, anything that was around that 76% and not breaking above it, and of course, the obvious one, move below the ABM yellow, you could just stay short and cover on moves that go back above it, and you flip the opposite direction. That becomes very clean from that aspect. But what happened here was quite interesting, because we started to get this dip that came down to the 23, started to support, but right in the no spark zone. Here it is, perfect example of it. No spark zone, and then orange going straight up. When that orange crosses, if you don't get that dip down right afterwards, his rallies just don't tend to have anything. So I was aggressively attacking the 50%, and at this point is when I was really believing that that 20 retrace was very likely, because this kind of weakness after having a pretty solid bull run, and that being the only positive extreme that hadn't been met for the day, really became a strong target. And it wasn't hard given our indicator reading here, because you can see we go to red right below there, the 38.50. Even if you wait for that close, then you have, which happens to be the 38% there. Again, you could do it again at the 23%. You can just go level by level, and you can just keep adding to it. So that was at 36. Then we make it to the 0 level, and it's like, okay, yeah, do you want to be shorting the 0 level? Yeah, I still have from 33 down to 21 for a range, which is another 12 more points on top of this. And at that particular point, we stay. Literally, this is why the long algo is perfect in here. It's this little white line, just following that as a short stop, going through. And then, literally, when you get to a point where you've reached an excessive move and you start to get the automatic reset, which that's why I have this little minus 20 line that I add in there on my own. I start to cover some of that stuff right there. But again, I also know that I've got the red line, so any pop becomes very attractive for a return right back to that zero. And when I got the white candle, I was expecting new lows to take place in that particular situation, and sure enough, it happened. And of course, we got even better signal here at the end of the day we just talked about, where we dipped again. So any pop from this particular point, wow, you get that much bigger range. In this particular case, 26 points with the expectation of coming all the way back to the zero line, which is right there at 12. So these are how I utilize it intraday to get some of the broader targets, recognizing that the positive extremes give us a very clear picture of what we can do within the setup, and then knowing the strength of when a white candle like this comes in that kind of trend. And I'll point it out to you, it's very clear to see you never got a steel reset. The last one took place right here, and it was pretty much at this particular point when the shakeout started fading in that you were in a clear run of the steel maintaining itself above, and then when it gets into this real separation right here, you're in a strong downtrend, and pretty much it's still there, no change whatsoever in it. So clear, we have a little blue buy candle coming in here. It'll be interesting. We're already starting to get a yellow dot, so maybe it pops just above the 23% and becomes another opportunity to attack again. So all exciting, good stuff, and looking forward to applying some of this to individual indicators, and I'm hoping to create a function that will have some of these various setups, like the setups for the white candle, my preferential buy ones as well, sort of individual functions for what we would consider some of the best setups, and that way they can be applied into any specific strategy as a standalone that does all the work for you as far as calculating all the different things that are needed, and then it gives you an output that would tell you that it's triggered, and that would make it very customizable for everyone's preferences. You know, some people maybe you're not as comfortable shorting at those peaks, or find that a little bit scary, want to have a little bit more definitive DOC spread in that. But just pointing out that the down snake that I look for, that's even with the cyan under red, which, yes, I know cyan under red is always long, there are always opportunities to capture a little bit earlier. And if you recognize them, then you can decide whether or not it suits your style and your risk tolerance. So I hope that helps clarify. We'll keep adding into some of the additional setups in future videos so that you can stay current with them, because it's very exciting developments on how to be able to utilize the new paint bar. This is the GAM function along with the DOC Rising Show Me's. Which I've also made some adjustments to colorations in that. Sometimes I'll be changing the dots, but I'll let you know any of those adaptations. As always, trade well, and we'll talk again later.